Markets having started the year in very positive fashion on the first day of trading, proved to be fairly short-lived. Over the course of the next few sessions, we've given back some of those gains. It's European concerns that continue to weigh on markets. We have this year the debt load of refinancing, which is running into many hundreds of billions, and so the market is going to take its sentiment from how the initial auctions take place. This week we have seen some auctions of new debt in France, and I think the concern there was that we have seen the bid to offer, or what we call the cover ratios, being much skinnier than previous auctions, and of course we have got that overhang or rumour of a loss of a credit downgrade for, say, France from its AAA rating. So I'm afraid to say it is still this sentiment that keeps just a little bit of pressure. Saying that the FTSE 100 is still trading towards the top end of its recent trading range, so I don't want to be too alarmist about it. I think markets are broadly absorbing the news, but we are seeing some quite stressful moves in other ways on Europe, and start off with the currency market. Been highlighting the currency over the course of the last few weeks, because really having sort of moved from this 142 level of the euro versus the dollar towards the end of October, we've now seen a 10% decline in that particular currency rate, and that's a fairly meaningful move. It's certainly reasonably unprecedented to see such a big move in such quick order there, and it's the sort of move that now is beginning to dictate, I suspect, a few changing trends, one of which is really just to think about those European companies that are big exporters, because clearly the cheaper euro at the moment is making them more competitive, and will be a positive sign. I'm going to draw up a chart here of one of the big car companies, Volkswagen, which features on our buy list, and you can see here that the equity here is turning higher. It's turning higher with generally markets that have moved higher, but I would add that I think that there will be some currency play at work here, thinking just forward as to how competitive it will be, particularly for, say, Chinese that buy their cars in dollars, as to how much that may improve Volkswagen's margins. So just trying to think through some of the businesses that will be a beneficiary of the cheaper euro that we are seeing at the moment. European woes are sort of also just looking at the banking sector. Here we take a look at the chart of UniCredit, which is the largest banking institution in Italy, and the first of the banks to go into the market and raise some serious money to recapitalise their balance sheets. UniCredit had a rating, market capitalisation of about 11 billion euros, and to put it into context, they're raising around 6 to 7 billion euros. So it's a very significant capital raise. The issue is underwritten, but it was struck at a very significant discount to the prevailing market price. And you can see here that what we have seen during the course of this week is a very significant decline in the stock, moving down from just over €6 to currently trading around about €4. Each day we are seeing declines on this stock. Not only that, the stock is being halted many times during trading days. So there really is quite a bit of panic in the banking sector, and that is spreading right away through Europe. Deutsche Bank I saw this week down 5% during the course of one day. Saying all of that, I would point out that the UK banks seem to be holding quite well. Barclays, for example, seen its shares hold towards the top end of its recent current trading range. So I think this is very much a European problem. One other issue that European banks do have to contend with, and we do need to keep an eye, is the developing situation in Hungary. This chart here shows the CDS, or the credit default swap rate. This is the cost of insurance in Hungarian debt, and you can see how much this has risen since August of last year and is really motoring higher. This is also showing the US dollar against the Hungary currency. We see some severe weakness coming into the currency. So some real concerns about their position. And the concern for Europe is that it's expected that European banks have big exposure to national debt, which is running at about 140 billion euros, of which about 120 billion is the hands of some European banks. So it's a situation that we do have to watch quite closely in relation to that. I just want to finally move on to some equities in the UK to keep an eye on. This is Next. They started the retail reporting season when companies report how sales have gone, and Next slightly disappointed. It's quite modest in terms of the disappointment, but Next normally is a company you can rely upon to have performed quite strongly, and they did say that the stores side of their business was a bit weaker than expected over Christmas, and that really has set the tone for what has proved to be a difficult week for retailers. Next week we are looking at Tesco. They are due to report their Christmas trading over on the 12th of January. That stock has been a little bit weak of late. It's coming back into that sort of bottom end of the trading range there at the moment, so watch out for that one next week. And finally, for another company that is due a trading update in the course of the next 2 weeks, Man Group, the hedge fund company which is listed in the FTSE 100. This company has just hit a decade low stock price of 116 pence. It's down about 5% on the day, so we just need to keep a close eye on this one ahead of that trading update. As I say, that's due on the 18th of January.